Good evening and welcome back to Be Rich. I have my friend and nephew Shashwat Swaminathan with me here to discuss what the Fed did or did not do yesterday. And yesterday when we discussed, I did tell you that Fed really underwhelmed itself and allowed the market to get away. My opinion is the Fed has been dovish. J. Powell should have been more stronger, forthcoming and more hawkish. But there is another alternate point of view which some people have said and which Shashwat subscribes to, that the Fed has been hawkish and he has said whatever he could to be saying he's hawkish, and the press kept on asking for questions and they plucked something dovish out of his market and the market clustered it and moved up. And it need not, it requires a perfect storm too for the market's expectation to go through. There was an article in the Wall Street Journal about that.
Financial Times.
And there is also one at Financial Times.
Okay.
He is primarily read the Financial Times article, and I'll tell you what the Wall Street had to say also. Both said the same thing similarly. So let's dive in and see what Shashwat has for us.
Right. So I'll run over quickly what happened. So the Fed announced that they were going to only raise rates by 0.75 and sit and watch until the next meeting as to what to do. And when asked what the next agenda would be, what the plan would be, the Fed basically indicated that yes, we do acknowledge that growth is weakened, and the market has taken this and it's believed that this will lead to a dovish response and the Fed will fold. And which is why the S&P is up 2.62% and the Nasdaq is up 4.06% and the Dow is up 1.37%. So the market has taken to this information very kindly. Also, the Fed highlighted a document, that is Powell highlighted a document called the Summary of Economic Projections from June. And in that he's predicted that the Fed Open Committee has predicted that rates can rise to the mid threes next year, and the year after that to low fours and high threes. So what the Fed is basically saying through the projections is that we don't see inflation settling down over the next year. We think that further rate rises need to be done in order to see inflation controlled. So, but then the market did, maybe it factored it in, maybe it did not, because when you look at the futures, the futures market expectations, it says that they expect interest rates to hover around 2.5%, hit a peak of 3.25 around there, and settle back down to 2.75% over the next 2 years. So there's a clear disparity between what the Fed is predicting and what markets are predicting. So coming to which, first off, I have a question as to, first, if the Fed pulls out early, they risk going, so this is another argument which people are making to those who, you have popularly said that Powell is going to pull out early, he's not going to withstand the full brunt of high interest rates. So the argument to that is, will the Fed really risk going down as economic villains in history, or will they rather be fine with fielding angry phone calls from their politicians of the time?
The Fed has a history of doing a turn. Except Paul Volcker and McBurn or somebody who was there before him, kept doing U-turn for 10 years. The Fed has not been decisive in fighting inflation for a long time. And luckily for the Fed, because of the China effect and moving manufacturing out, Fed has not really seen inflation in 20 years. The last time rates really had to go up to crush was in early 2000. So in the last 20 years, you have had a regime of low interest rate and low inflation. And so they thought it's the great moderation and inflation has been conquered. There were several factors. The main thing is shifting of factories to rest of the world was a reason for the
outsourcing production.
Outsourcing production meant they had cut costs. And the way Paul Volcker had stamped out inflation, a generation did not forget it. He took it up to 20%.
Yeah.
He allowed short-term rates to go to 20% in US.
Yeah.
Something which you cannot imagine.
Even while graphing interest rates, the US since its foundation has seldom seen that high of interest rates.
Yeah, whether Powell has that kind of nerves, I don't know. Then there is another problem. There's huge debt overhang and the Fed is responsible for it. If they increase interest rates, that debt is unserviceable. The books are not going to balance. So how do you get your way out of it? You hyperinflate. That's inflation above 60% and make the debt worthless. That's what the German inflation did.
The Weimar Republic.
Or you go for austerity. That is, you curb your spending, sacrifice growth, and there is a lot of pain inflicted. The public is not going to like it.
You risk becoming a Japan.
You have to really tighten and bring down debt. Something what Germany did. We won't do that. So what you are going to get is a form of financial repression, which is kind of Goldilocks everybody likes. That is, keep inflation at 5%, keep interest rates at 2-3%.
Yeah.
So the saver is always punished because he is not going to get real interest rates.
Risk free.
Even with risk, you won't get much.
Yeah.
Because they will keep costs so low. That is, inflation, the gap is 3%. Risk free, even if you take AAA corporate, will not be available at above inflation rate, and slowly debt will get inflated out. This has various consequences. This is what I mean by financial repression. And therefore, I am very convinced that J. Powell will not. He walked the talk because unless real interest rates cross inflation, inflation has seldom come to 2%. Today, inflation is 9%. So, if your real interest rate should be 9.25% for you to be walking the talk. Let's assume that I am over exaggerating and inflation will fall. But inflation is not going to fall to 4% with interest rates at 2.5%.
Yeah.
So, even if he pushes it to 3.5, I don't see it coming to
4%.
The froth can go, it can come to 5 to 6%. So he should not be projecting any number and saying I will come there and I will drop, because he kept saying it's transitionary.
Yeah.
Now he's eating his own words.
Yeah.
If he's really serious, he should say I will keep increasing interest rates till inflation comes to an acceptable level. What is the acceptable level? That is 2%. That is the Fed rate. For the for the inflation to come to 2%, your rates have to be minimum 5 to 6%. But here he is saying low force. So he is talking about a maximum return of 4.25. So if because gasoline prices have cracked, you will have some fall in prices. So in September, you may have a reading for 7. I'm sure he will read it as a positive sign and increase it by 0.5 at the most hawkish tone. Or he could say 0.25.
Yeah.
The history of the 1970s has shown us that if you don't crush inflation fully and you take the pedal off because of the political pressure, even before inflation hits your target, you will allow growth to return, inflation to return, and it will go back normally and adjust at that level.
So the boogeyman still exists.
The boogeyman exists. What nobody is talking about is soaring services inflation. Services inflation is nothing but
wage inflation.
If wage inflation is set in, it will require enormous power to crush inflation. I think it has set in because otherwise Jeff Bezos, who is by nature a Democrat, is not going to fight Joe Biden on Twitter because rising wages is hurting Amazon. If you notice, United Airlines, a big airline in America, had to surrender to the Pilot Association with wage rises. So unions across America are now demanding higher wages.
Right.
And cost of fuel, food and rising. And food, fuel and housing, which is 60 to 70% of a lower income, bottom 20% American.
The lowest quintile
is up more than 20%. I accept the argument that this is a blunt instrument.
That interest rates are a
blunt instrument. You cannot target exactly what is the problem. You will destroy the house. But interest is always a monetary phenomenon. You have more money chasing less goods and services.
Right.
Therefore, the value of goods and services has increased. The only way to do it is increase interest rates. But America is in the danger of preaching to Turkey and preaching to the rest, not chickening out from its own responsibility. Jimmy Carter lost the election. He was a good president. He lost the election over this. Joe Biden has put his foot into the mouth right from Afghanistan to every single step he has taken. So his White House, which is a very weak White House, is going to put a lot of pressure on Jerome Powell to dial back. Jerome Powell will continue till 4.25. My question is, if it is 4.25 and 5, will he continue to increase interest rates, or he will say, no, things will come back by itself to normal?
Right, that is the question. Next question. How do interest rates affect savings? So Rajan has said, Raghuram Rajan, the ex-RBI governor, has said that savers put more money aside as interest rates fall in order to meet the saving they think they will need when they retire.
Exactly.
Okay.
Because if my rate of return is lower, then the capital I need is more.
To retire.
Therefore, I have to take out a higher capital out
To maintain your lifestyle.
to maintain my lifestyle at a later date.
Yeah.
Therefore, if interest rates are higher, people will take lesser money. That is what he is saying. This is his theory.
And but then there's also the alternate effect of pushing consumption to the present rather than consuming in the future, because the discount rate is now lower.
Yeah, if you consume too much, like the bottom 20 has said, I read somewhere the bottom 20% in America has a net worth of minus $7,000, negative.
Yeah.
The next 20, which will bring it to 40% of America, has a median savings of $6,500. So nearly half of America has less than $10,000 in savings for an emergency.
So the dual effect of lower interest rates or an interest rate, this thing is the income and substitution effect.
See, the real problem, as far as I'm concerned, is that you have increased inequity. This is by keeping interest rates lower.
Yeah.
You have made the price of hard assets very high, excessively valued. It's not the bottom 20% quintile or the next 20% who owns hard assets. Hard assets are owned by the top 5-10%.
Right.
Inflation has made sure that you have rewarded the top 5%.
Yeah.
Right?
And kick the 95% to the curb.
Kick the 95% down the curve in the fear that there will be no jobs.
Yeah.
But jobs, there is only Naidu. That is the jobless rate in America is at a 50-year low. If you are going to give more interest rates, you are definitely going to get more inflation.
Right.
And this is why I feel that J. Powell will chicken out.
Okay, and finally, this is more of a conceptual question. Interest is famously tax deductible. So, do you find there is an argument going around that interest as tax deductibility, tax deductibility of interest is something that is a structural source of excess leverage? What do you think of that?
I 100% agree. I've seen it in India. Nobody bought a house till
Interest was tax deductible.
Yeah.
So you think that this has basically opened up this thing?
It opened a Pandora box.
Yeah.
You have a real estate boom in India. Prices are not coming down because people think that the interest is tax deductible. So I don't know the US tax laws. If you make car and credit card tax deductible, interest deductible, you will increase the credit cycle. This I understand absolutely, and I've seen it in my life.
So you think it's something which should be repealed given a chance?
It should be, but in India or anywhere in the world, like Socrates said, democracy is a sweetmeat shop.
But what's the argument behind making interest tax deductible?
At what argument it was given? The economy was in a recession. The economy active didn't pick up in 2003. The idea is if you made it tax deductible,
people will borrow and consume.
People borrow and consume a house.
Then the multiplier.
So more after agriculture, the highest jobs was in construction. More people will happen in constructions, and you created a boom, but you created an unsustainable bubble.
Right.
In real estate.
So you sound to be more on the Hayekian camp currently, where you say that a bubble seems more dangerous than temporary unemployment.
I am not in the Hayekian camp. All I am saying, I am neither an Hayekian nor a Keynesian. Right? In a democracy, only Keynes will work.
Yeah.
So we are a democratic society, right? Because everybody wants. It's in the nature of humans to want immediate gratification.
Yeah.
And say they will vote for somebody who wants immediate gratification. So let's keep Hayek out.
So he's not even part of the discussion.
He's not even part of the discussion. Now, having decided that, politicians cherry pick Keynes.
Right.
They do the good, easy part.
Right. They don't take the full prescription.
Yes, they don't raise taxes.
Yeah.
When times are good.
That is the part where you rein it back.
You rein it back. You don't rein it back.
People don't realize the Keynesian multiplier is a double effect.
Yes.
One is you expand more because of a small increase, but also you decrease a lot compared to a small decrease.
So you should have, in good times, when the boom became unsustainable, they should have curbed it. They should have done something. People bought. There's a story in one of the Indian press where a guy bought 1.4 lakhs. He took 4 housing loans, thinking he can flip it in recent times.
Sorry, 1.4 lakhs
in salary.
Right.
And 4 housing loans.
Thinking he could flip the property.
Yes.
And I'm guessing he...
Obviously he went bust.
Right. And this was recently?
Recently. I read it about 2 weeks back. And I work with a lot of middle class people. I see them make irrational decisions in real estate.
And a part of this is the belief that interest being tax deductible is something which...
They don't know all that. They think if you put in real estate, you will make money.
Right.
Because most of these people are who started working in the last 20 years.
Yeah.
And they are the first time property owners.
Yes.
And their elders have said
land is the place to be.
Land was very cheap in 90s and 80s. It has become very expensive now. So if you put your money in land, it is safe.
Right.
Well, it is not true. Anyway, that's another discussion for another day.
Yeah,
Thank you for watching Be Rich. If you like the content, kindly hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.